After better than expected inflation numbers, the market has been on an absolute tear. But is there an end in sight? Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on YouTube or on the replay, do me a favor and hit that like and subscribe button down below to make sure you get updated every time we upload new videos here on the channel so you can stay abreast of what's happening in the market. But yeah, the market went absolutely nuts this week, to say the least. Obviously, on Monday, we had a little bit of an indecision day. We really kind of stayed right on that resistance line. But then Tuesday, here it went. The market just went on an absolute huge gap up on, slightly better than expected inflation numbers, and the risk went off. Everybody's throwing cash into the market, and you see what happened there. And then the rest of the week, honestly, was a little bit more subdued. With all that euphoria on Tuesday, we really kind of cooled off and really started to consolidate a little bit. So I've got Riz with me here tonight. Riz, my gosh, this is just insane, this move. Can we stay up here, do you think? Or, are we looking maybe to kind of retrace a little bit here in the next week?
Yeah, insane indeed. Definitely extraordinary by every measure. You could see even on the RSI, we've gone literally from oversold in the end of October to overbought at the middle of November, pretty much. And wow, it's been an extraordinary move on both ends. So when we were dropping fast and furious. Back in October, it seemed like we were gonna go back to the lows, and I'm like, I don't know, it's a bit too much. And then we got the rally, and this rally was like, oh my God, we're going to all-time highs type. So it's like this pendulum has swung either from extreme fear to extreme greed, and I don't like it. I don't like it one bit when it does that. That tells you that there is some significant volatility, and that there's a lot of pent up either selling or pent up buying. So we never have like a orderly market structure, and that's not a good thing. So I will say, if you get the direction right, it can work out profitably for like if someone was short in October, it would have worked out really well if they held. And then if someone went long biased completely at the start of November, they would have worked out really well for them too if they held. So usually it doesn't work like this. Usually you have either a steady move up or a steady move down. This is significant volatility, and this tells me that there could be more downside to come. Anytime we have a big drop followed by a big V type of move up, unless you're comparing to 2020 post COVID. Thanks, Chris, for drawing that there as well. You can anticipate that there's more volatility to come. I feel like even at 4,500 right now, Chris, as you can see, 4,600 is that high of the year in July. That's a July high we mentioned, and you had that line drawn perfectly. And look at that gap up right from that trend line, right? Beautiful. I mean, it's just extraordinary how that worked out. But yes, definitely, I think we're overdone, overbought. I think 4,500 is what I was targeting. I mentioned wouldn't be surprised if we see 4,500 the past week. And then you're right, the last 3 days was kind of a boring yawn type of day, and I mentioned that in Elite as well. So I wasn't really doing much in the latter half of the week. Rightfully so, as we consolidate here. If I have to say, I'm leaning more neutral bearish, more so bearish with this price action, with this move. For those that know me and my kind of style, again, I'm not saying it's the only style that it should be utilized or the only way, but the one I gravitate towards, the one I specialize in, is definitely not so this chase. Either buy everything after this rally or short everything after a big drop. I'm not that kind of momentum chase type of trader. So for me, it definitely more so I would say contrarian, more mean reversion. And for those that don't know what that means, you definitely gotta get in the masterclass for that. But really, yeah, really, I feel like to answer your question, there is a little bit of move up. Like obviously, 4,600 would be, I think, possible, but very much. I think we would have to see a lot more positive macro data. What people are forgetting is with the inflation print coming in better than expected, it wasn't that much better, but it was a bit better. But what people also are not thinking about, I would say people but the market, is that we had a little bit of an increase in unemployment. We have a little bit of increase in the jobs, unemployment, people, essentially looking for jobs in the job market, but they're not getting the jobs. So we payroll numbers, all that kind of stuff is not bad. Don't get me wrong, it's not bad. It's just a tick above where it was uh, pretty much at the lows. So as I mentioned months back, even the past few weeks, I said, look, the unemployment is so low, it's been so great. It's just statistically not really possible to go much lower. So what does that tell us? That there's only, uh, for it to go higher, meaning unemployment going higher, which is all things considered isn't a good thing. But in this market, it's considered to be a little bit of a positive because that means the higher rates for longer type of scenario that we've been in since 2022 has played out or continues to play out, and that the economy is quote unquote cooling or slowing down, just not at the pace that the Fed even wants. So they want it to be faster. It just hasn't happened yet. So the consumer, the economy has been more resilient than expected. But I do think we're going to stay in this long rate environment into the next year, at least till May, June. Potential for rate cuts starting maybe next June, but I think that's moving goalpost. So yeah, apologies, I threw a lot at you guys, but ultimately a lot to be I would say cautious of as we head into December and obviously the last month of the year, holiday month. And of course the whole Santa Claus rally is a potential there as well. We'll see how that plays out, obviously. But historically, based on seasonality, December is definitely a bullish month.
Yeah, and just be aware we do have a slightly shorter trading week this week with Thanksgiving being celebrated here in the United States on Thursday. So if I'm not mistaken, the market should be closed for that. Yeah, so that's always an interesting thing. We're going to call this the turkey rally this year because that was an absolutely insane move there. But yeah, I mean, this consolidation is, not totally unexpected. I think when you have a big move like that, it's definitely something that kind of needs to happen. We'll have to see if it can hold those gains going into a shorter trading week. Let's take
Yeah.
a look and
Oh,
see. Oh, go
sorry,
ahead.
Chris.
Yeah,
Sorry.
yeah.
My apologies coming back there. I also wanted to update people because I did say 2 weeks ago or last week, I mentioned online in Elite, but also on IG, I said, I had a short position about a 600
Oh,
$1,000
yeah.
short position on SPX. So obviously for transparency, I did update that, I did close that. Again, it went against me, but that's fine. Again, transparency both ways. When I win and when I lose, it's important. I think that's really my ethos. And I feel like just to clarify for those that maybe were wondering or maybe missed my update on social media or on Elite, I did close my short on the SPX last week. Sorry, in the beginning of the week, or sorry, middle of the week, I should say, after this kind of big pump up. And then the consolidation, I was hoping that we'd see a little bit of a retrace, but we didn't. Because of this consolidation, I'm like, okay, I'm not going to carry through this weekend. I'm out. So I got out, I think, like Wednesday or Thursday, missed like one of those days. So for a loss of approximately 4,900, or let's just say $5,000. So yeah, not happy about that, but still, I was able to contain the loss. Glad I got out because it did go a little bit higher after my exit. So really managing risk, and hopefully you can see that play out in real time, whether it's a profitable trade or an unprofitable trade. Important to manage the risk, manage the position. So yeah, for those wondering, I think I did see a comment on the last video as well. Someone was asking, wonder how that short played out. But hey, now you know.
Absolutely. It's one of the things you kind of got to own your losses. And this could have easily went the other direction if inflation numbers came in hot, or worse than expected, I should say, then market could have went the opposite direction. It's just one of those things. Sometimes that catalyst doesn't work for you. And you just got to take your lumps and move forward. It's one of those things that happens. And, we live to fight another day. Don't necessarily need to bag hold everything to, the end of days. So
Definitely, it was definitely a catalyst type of hedge and a speculative position. And you know what, with these catalysts, anything kind of goes. But yeah, not a big issue. 5K on that kind of position for the account size for me, not worried.
yep. It's not a huge loss for Riz. All right, let's take a look here and see which sectors benefited the most from this rally so far. And I feel a bit like a broken record, but tech is really just soaring right now, really going high. All these growth stocks These stocks that people like to, throw their money at, for lack of a better term. Definitely seeing the benefit of everybody jumping in hard with this rally here on Tuesday. Communications doing about as well. Both of these are above plus 40% on the year, which is absolutely nuts. Consumer discretionary looking really good right now, up 30% on the year. S&P 500, the SPY ETF, up 17%, coming in on that 20%, getting really close. And for the first time in a while, we have a couple sectors that are out of the dumpster. We see financials actually seeing some movement here, a nice big spike with that move on Tuesday. And energy really just kind of holding tight here right around that zero line, while real estate, healthcare, consumer staples, and utilities all still in the sub 0% range as far as growth is concerned this year. So those definitely taking a hit, but looking up a little bit. I'd say real estate got a really nice bump with that jump in the market. Utilities looking pretty good too, but yeah, it looks like everybody's just dogpiling back in on tech and communications again. Riz, we've seen this before, obviously. Early in the year, we are currently above where we were before. Looks like here in July when we hit that July high on tech and things like that. But, I kind of feel like, everybody's kind of doing the same thing they did again. And if we get some type of a negative catalyst, the bottom's going to fall out.
Yeah, it's what we call a crowded trade, right? Everyone's dogpiled in, as you said. It's a crowded trade. Everything's kind of like just everyone's bandwagoning on this. It's too much. We see these, right? Especially the last 10, 15 years, with the predominance of algorithmic trading, with HFTs, with a lot of that stuff, because it's like it's very fast paced. Everything moves fast and everything, and it's not just singularly individuals that are just smashing their head on the buy button. It's more than that. It's like I always joke. I say, look, don't face plant the buy button or face plant the sell button. Don't go to that extreme when it comes to the momentums. And it seems like that's what's happening, but it's actually a lot to do with institutions covering their shorts. We did see, based on just institutional data, a lot of institutions had some short positions, net short positions, and they may have probably closed here, maybe got squeezed a bit. So that leads to further rallying, right? I'm not going to explain how that, but ultimately covering shorts results in more buying and demand. And then I wouldn't be surprised that's part of it. I wouldn't be surprised if there's algos piling in and just running on the momentum, because algos will predominantly trade purely based off of simple momentum. There are definitely more complex ones, but the simple ones are predominantly just getting on the train the moment they see some good pace there, and then they just get off at the next stop. That's their job. So we definitely see that here happening. What's surprising here is with financials moving up significantly. Sorry, what's it called? The XLY, which is consumer discretionary. That moving up significantly as well. So that tells you, even though these three, consumer discretionary, tech, and communications, all were outperforming the S&P 500. Consumer discretionary was kind of like, you're like, oh my God, this is in trouble, kind of getting back to where the S&P 500 is. But nope, big recovery this year, this past couple of weeks. With everything else underperforming, not too much to be gleaned from that. Like you said, the S&P 500 continues to move up about 17% on the year now. So that's pretty significant.
Definitely a big move. And we're seeing quite a push here towards the end of the year. So it'll be interesting to see how the things sort out. Let's take a look here at the asset classes, because I think that everyone is a little bit surprised by oil at this point. Obviously, we came up here towards the end of September. We got close to about 94 a barrel, and it has been nothing but down since then. And, I'll be honest with you, after, the events in October and everything happening in the Middle East, I am incredibly surprised about what is going on with oil right now. Gold, not so much. We had this, this kind of parabolic move. And last time I talked about it, I drew it out. Obviously we did retrace some of this, massive rally in gold. It looks like we ended the week definitely up a little bit here on gold, closing right around at $1,980 an ounce. But Riz, I want your opinion on oil here, because we're going into the most traveled day of the year, being Thanksgiving and around that time. I've heard like stories about like all of these strato tankers sitting outside, U.S. ports and stuff like that, looking to pick up oil and take it to other places, but yet the price of oil just keeps going down. What is the deal with that? Because I think there's a lot of people who don't understand why oil keeps going down at the rate that it is.
Yeah, so there's a few reasons for this. I think the biggest one being that the market is, first of all, this is a technical move down. So not necessarily totally because of fundamentals. We know sometimes fundamentals can remain the same, meaning, there's war, there's could be limited supply, but price is still going down. It should be going up, but they're going down. Why? Because this could be a pressure trade, so to speak. And we do know that quite a few hedge funds, CTAs, commodities trading firms have shorted oil for whatever their thesis is. So they wouldn't be surprised that's had an impact as well from a technical side. But fundamentally speaking, one of the reasons that oil could also be a little bit depressed right now is because the market or these institutions and the market as a whole could be thinking that perhaps with the recession potentially looming, that's usually obviously a negative, right? That's a negative for oil consumption. When we think recession, we think less travel, less spending on things that people may not need to do, and oil is a part of that. Some of it's essential, but some of it has to do with discretionary spending. So if there is a recession on the horizon, maybe that's being priced in currently. Right. Just like you, I felt that, what, well, I wasn't saying oil's going to go to like 100, 110, 120, but I did feel like, okay, 85, 90, 95 even seemed pretty decent, reasonable considering the geopolitical environment in terms of the Middle East and with the sustained production cuts from
Yep.
OPEC plus. So the fact that it's moved the opposite way kind of tells you like, whoa, the fundamentals are not completely aligned with the pricing structure, the technicals. So it is an interesting trade. I think there is a potential setup here for long oil. For those that have the similar thesis as me. We did trade some oil this past week. We did make some money on it, and we subsequently exited. So we'll see what the setup is and the potential is for this coming week. Obviously, as you said, it's a shorter week, so I have to factor that in. But ultimately, I do think there's some upside.
Yeah, there definitely seems to be, going into the colder months here, maybe we see a bit of an uptick in the price. We'll have to keep an eye on that. Definitely something for all of our viewers to keep an eye on. Again, we're not telling you where to get in or what. We're advising you to take a trade or not, but definitely something that we are keeping an eye on. So something you could look at as well. Let's take a look here at the bond yields and the U.S. dollar. Now, the bond yields have been coming down a little bit with this massive rally, but still looking very good. Let's see here. It looks like our 2 years are sitting right around 4.89% yield, followed closely by the 30-year at 4.592%. And the underperforming one compared to the others is the 10 years at the lowest here, right around 4.439% yield on the year. But the dollar here, after consolidating for a while, is starting to come down a little bit. I mean, we're still looking nice and strong, if you ask me. I don't think that there's any concern about that. Is this more of a technical move here, Riz, after this, this big rally here since about the end of July? It was right when the market topped off. We kind of made this big push into October and consolidated. Maybe we're just retracing a little bit. I mean, is this anything we need to be worried about?
Yeah, nothing to be worried about. Just kind of makes sense because, as I said, look at the bond yields also kind of pulling back a little bit because that tells you the market's saying, okay, rate hikes are pretty much done. For this economic cycle, for the time that we're living in now, I think it's reasonable to say that this is it. So this 5%, 5.25% to 5.5% benchmark rates this is it. This is where we are at peak for this cycle. And that is being reflected in yields coming down. And also the US dollar coming down in terms of its strength to other global currencies. So not surprising. I've said, we haven't got a rate cut yet, but the market reacts. It's future looking. If it's anticipating a potential rate cut 6 months from now, maybe May, June, like I said, that's being reflected a bit here. And it's not surprising. But is it bad or is it like, oh my God, it's a massive drop. No, I mean it is a little bit of a pullback, but nothing crazy yet. We're gonna have to see how the rest of the data comes in for the next few months to see ultimately, does this mean that yields continue to go lower? I think they could if we see a Fed saying that, look, we're holding. Just the fact that they're holding, not raising, that seems to be the market's cue for a potential cut sooner rather than later in 2024.
Yeah, don't expect any cuts for the rest of the year. I'll tell you that right now. Let's take a look at the important dates for this week. Now, if you are here on our live webinar, I would love it if you would start typing your questions for Riz now so that we have that ready to go after this next section. But here are the important dates in the week, and there aren't many. We've got the FOMC minutes on Tuesday, and the day before Thanksgiving, durable goods orders month on month. Nobody really cares about this. And I'll tell you guys from my experience, Wednesday, there's not going to be too many people in the market. Volume should be fairly low if, historical, data holds precedence into today. But, FOMC minutes on Tuesday could be interesting to see what they have, in there. But yeah, not too much really to talk about this week, Riz. With these minutes, is this anything we need to be keeping an eye on real close, or is it just going to be kind of like okay, that's it and it's done?
No, we're gonna keep an eye on it, but nothing significant, nothing extraordinary. I think I don't think there's going to be anything that the market finds surprising in that. Usually, in sometimes in the past, there's maybe one of the Fed members said something. Right now, I don't think there's anything to be discerned from the minutes. And like you said, durable goods orders, not too big of a deal. Even on the earnings front, I think the only big thing that is reporting this week is NVDA. From an earnings standpoint, so that's going to be interesting. They're significantly overbought, pretty much hit an all-time high on Wednesday. So the earnings will be interesting. The stock is up probably 400%, 300% maybe since start of the year.
Well, let's find out.
253. Okay, wow, that's crazy, right? For such a large company. It's a large company. It's not a small stock by any means. It's not a mid cap, small cap at all. It's been a large company, and it's just gotten bigger, right? So they've had some stellar earnings for sure, but there have been some people asking me, Riz, this could continue to run, AI, yada yada. I don't know. I think that all the AI positives that could ever be extracted out of this have been done so. I think this is significantly overvalued, overbought from a technical standpoint. And as a result, if I had to lean one way, I'd be bearish. But as we know, earnings are a toss-up, right? 50-50, anything kind of happen, not only from the earnings result, but also from the I would say the reaction to that.
Yeah, definitely. That is a heck of a move for just only about 11 months, worth of price action, and 250%. That's pretty crazy. Yeah, Isai, if you could give us a little more information on what you're looking for in that ticker, would be easier for us to phrase our answer in a way that makes sense. But yeah, NVIDIA going absolutely crazy here. I bet, if you want to get out your bingo cards, right, for the NVIDIA earnings call, if you, have AI in the top right corner, you should be good to go for your bingo on that one.
Yeah, I know. I jokingly said, we're gonna. I think it was like the summer, when it was actually really heating up all the AI stocks, and I was like, right, we've got to change Riz International name to Riz International AI or Riz
Absolutely.
AI, right? Definitely missed a move there on that.
Okay, so Isai says he would like to own that ticker in the future. It had a rally in the past week. What are the chances for a medium term? All right, let me take a look here. LMND. Lemonade. I remember this one. We've played with this in the past. Okay, so yeah, we definitely had a nice big jump here at the beginning of November. Kind of came back and we popped back up here over that 50-day moving average. And we're really just kind of hanging out there. I mean, for me personally, I'm not going to take this one. It's not the type of company I would be interested in. But hey, if this is something you like and you believe in, I feel like from a technical standpoint, it's not a terrible entry. Now you could make the thing and say, "Oh well, Chris, you should get in here down around 1050." Well, yeah, of course, if you knew the future, it would be great to get in there, and you'd be very happy if you did. But I think this actually shows quite a bit of strength. Honestly, the 50 is holding very strong here after we had the pullback after the big rally. We popped up here on Tuesday in sync with the market. And this move on Friday is very confidence inspiring, if you ask me, from a, excuse me, sheerly technical trade perspective. Looks pretty good, and looks like earnings were in line as well. Looks like the company's not quite making a lot of money yet, but maybe they'll get there in the future. As far as EPS is concerned, Riz, what's your take on Lemonade?
Yeah, I agree. From a fundamental standpoint, not really. I believe Lemonade's like an insurance company or something, with a tech slant. But I feel like, yeah, from a technical standpoint, just the fact that it respected that 50-day moving average, in the $15 area. This would be more of like very much a technical trade. You could easily potentially consider a long on this and then keep a stop around the 200-day moving average, right below the 200-day moving average, and then keep that with the profit target of maybe 18 plus, maybe, if they could continue to run. Personally, with the market being where it is, I'm not too thrilled on trying to extract more juice out of all these big runners, because a lot of these tech companies have run. This lemonade has run and been juiced significantly. I don't know if it has any more in it. Personally, I personally feel like this lemonade needs to be just put to the side. But if you do wish to extract anything out of it, yes, make sure you have a hard stop on. Don't bag hold this thing. And as we know, without saying the obvious, it moves big.
Yeah.
So just be mindful of that. And good luck.
The double entendres and the puns here are just too much for me to handle. I mean, if can we squeeze any more value out of it? Is having more juice left. It's fantastic. Very well done on that one, Riz. I appreciate that. Kind of hand in hand with that, let's take Axel's question. His question is, definitely more broader question, but he's asking, is it possible to continue with a winter rally in the S&P 500? I think, me personally, absolutely, it's possible. The one thing you have to remember is, things can remain overbought and stay overbought quite some time. The same thing is true for being oversold. So, there's nothing to say that we can't get more upward pressure here. I will say that this week, I don't think we're going to see a lot of movement unless we get a big catalyst. It's just my feeling. Always going into these midweek holidays, usually the market is very subdued for the first part of the week, and then Friday is going to be like nothing. It's no one's going to be trading. I won't say no one, because there will be day traders and stuff like that, and algos are always going to trade. But as far as the mom and pop investors, you're not going to see a whole lot of movement on Friday. So this week, I don't think you're going to see too much. Now, of course, I say that, and we're going to have some catalyst, and it's going to go crazy. But moving into December, I think, yeah, you could see that happen. Yeah, I can't say that it will happen, but it's definitely possible. There's nothing stopping it. Riz, what's your thoughts?
Yes, can it happen? Yeah, absolutely. 4,600. If we see this continue, yeah, 4,550 could be the next stop, and then depending on how that looks, maybe 4,600. I do feel like I said it earlier, it is already overbought, overdone, in my opinion. But like you said, it can continue. If I had to pick one side or the other, I would personally be more leaning towards the bearish short side, but that's me. But yeah, that kind of gives you I think for those that were positioned long heading into November, great. I think if you're able to squeeze this out, make the most of this run, increase your stops, and trail your profit stops, fantastic. For those that are like, oh, let's fucking go long now, I'm like
Yeah,
trying to
let's
make up
chase.
for lost time and lost opportunity. Fuck no, I would not chase this. Absolutely not. I would not chase this. I know this looks very bullish, and it can be, but just from a probability standpoint, I would not chase this. That's just my views and experience. Like I said, but can I go to 4,600? Yeah, there's definitely that chance. Can I go to 4,800 by the end of the year? Not a chance. Statistically speaking, maybe next year, but I don't even know. I don't think, if I had to say in good conscience, that I don't think we're going to see that 4,800 all-time high. even next year. But hey, I don't want to jump the gun. That's a big tell, right? That's a big prediction. But again, I'm not gonna go out on a limb that we're not gonna see that at all next year. But if I have to make a guesstimate, yeah, I feel like I don't think the market has any reason to be there at the 4,800, and even I would say at 4,600, it's kind of mixed bag.
Fair enough. I believe the band was called TLC, is Don't Go Chasing Waterfalls. It was very popular back when I was in high school. I know that dates me, but just stick to the rivers and the lakes that you're used to. And what that means in this case is, don't chase these rallies. It's a great way to get stuck holding the bag, and then if we do get a retracement, now you're really in a pickle. As opposed to being patient, especially after a major gap up like this. I mean, that's one of the biggest gap ups we've seen in quite some time, and completely blew through resistance. So be very careful with that if you're thinking about taking a position. All right, Abhishek said J&J broke out of a downtrend, not very convincingly so, but also bounced off 145 twice. What are our thoughts on a potential swing to 155? Now that's how you ask a question right there. All right, let's take a look here. I don't have any lines, so yeah, you're absolutely right. It looks like 146 was closer to the bounce, but that's just semantics. But yeah, I see where your head's at on this one. I wouldn't say that it's necessarily broke out of the downtrend. It's really close. Yeah, I'm not going to call that a clean break, if you ask me. I mean, we gapped up and then we sold right back off. We're basically sitting on the downtrend line, if you ask me. So yeah, you're definitely right. It's not a very convincing break. It's not very confidence inspiring. And this week again with reduced volume, it's going to be questionable whether you're going to see a lot of upside on this. Now, of course, you could. It's very possible. 155 looks like we're going to need to break the 200 simple moving average on that one. Definitely possible, but the 200 is crashing down here, as we see with this sell-off. Unless I've got my moving averages backed up. I do. That is the 50. My mistake. The 200's up here in the red line. So my mistake on that. So we do have the 50 coming in. It's kind of crashing down. But yeah, I mean, you could, if we kind of get a pullback again to 145, 146, and it holds there, if we do see this, this little break kind of fail and we get back down into this downtrend, if you see another bounce there, that could be a good indication as a possible location to get in long if that was something you were looking to do. Right now, I don't know. Riz, would you take this long right now?
I have a long position.
Okay. Well,
yeah, I have a long
but I meant
position.
right now.
Would I take it now? Yeah, I would still take this now because I like the company, I like the fundamentals, I like the sector it's in. It has a dividend coming up, as well. I feel like, yeah, no, this is good. This is definitely a good setup. I have a long position already. And from a technical standpoint, is it a clear breakout? Not yet. I would be calling above 152, a strong break above 152, a nice breakout. That's what I would call it, a nice breakout. But again, I don't feel like I'm that kind of trader where I need to wait for that kind of breakout to be able to get in long. I think at this point, the fact that it's bounced up from 145 is great. I feel like that's significant enough for an entry from a technical standpoint. From a fundamental standpoint, is great already. It's a great company. It's not going anywhere. So there's that.
Yeah, earnings look like they were in line as well. Very nice beat on both revenue and EPS. So, definitely looking decent. All right, Riz, how are you feeling about Pfizer? Seems like it's at a good support level, and I'm thinking of averaging in. And then Yas asks about the same thing. Says approaching a major support here, but still in a big downtrend. Yeah, you're not wrong about that. That has been in a long-term downtrend. But looks like, yeah, we've bounced off here right around 28. Gosh, just think of where Pfizer was before. Oh, how the times do change. But yeah, let's see. You are not wrong. Major downtrend here for Pfizer. Yeah, it looks nice enough. So yeah, we bounced off at 28. And I mean, not like super big break. Obviously, we've got a lot to get through here. The 50 is still pushing hard down, right along with this downtrend, and then we've got the 200 to get to. But I mean, again, Pfizer, pretty solid company, making lots of things that people use and take every day. Let's see how earnings looked here the last couple times. So not bad, a paltry 18 billion in reported revenue. Just pocket change these days. Riz, so what's your take on this one? I mean, this has been in a long-term downtrend since even longer than what we're seeing here. Even with all of the we'll just say the 2020 revenue. What's your take on Pfizer?
Yeah, great company. Obviously, if you would have said this is where it would be, 2 years ago, I'd be like, absolutely no way, makes no
Mm-hmm.
sense. But here we are, right? Continues to get battered, go lower. You got to be careful with this because although it's a fantastic company, dividend yield decent, you don't want to just be piling into this depressed stock. We know that there's periods where a stock can remain in doldrums for months and even for a better part of the year, as you can see with this. So you don't want to just have this being like trapped capital, right? From a trader standpoint, from an investment standpoint, if your horizon is a year plus, yeah, fine, maybe, right? This is not going anywhere. They still have some decent drugs in pipeline. That's good. But from a technical standpoint, not very confidence inspiring. If you have a position, fine. For long term, it's not the end of the world. If you feel like adding, like as Robert asked, yeah, you can just make sure you're not significantly heavy in this. Like you're not overdone. You're not like, oh, it's lower, it's a better price, and then it goes lower. Oh, this is now a better price. Don't just keep doing that, right? That's very much a personal thing. Like I don't know what your position is or how large of a position is as per your overall portfolio size. So don't go crazy from a positioning standpoint. But if you have some wiggle room, yeah, you can average in a bit. I wouldn't say this is a breakout or anything like that. This is very much a downtrend, very much a depressed stock, and very much a significant downtrend. It is very much undervalued. Again, I've said all these things, but that doesn't mean you go out and just keep buying and buying and buying, right? You could very much be in this trade as like a value trap where you're just sitting there and just waiting and waiting and nothing's happening. And you're poking it like, come on, do something, but it's not doing anything. Uh, Regardless of how much you poke and prod. Yeah, right. So be careful with that. I'm not personally, again, if you care about what I'm doing, I can tell you right now, I would not be out there buying this just yet. Not because it's not a great company, but because I don't want trapped capital. I'd rather wait. A cash is a position, patience and discipline is the mantra.
Absolutely. Great questions tonight, guys. Thank you, everyone who is here on the live webinar. Obviously, we have a big American holiday coming up here in Thanksgiving. I just wanted to take a second to, be thankful for all of our members here in Elite who make this possible. You guys are like family to us, and we really appreciate each and every one of you who has stuck with us for so long. And of course, all of our subscribers here on YouTube, for everybody who watches these replays. Thank you so much for doing that. If you could, make sure you hit that like button. That really helps us out a lot, grow the channel. That would be a great Thanksgiving gift for us, in addition to all of the turkey that I'm going to eat next Thursday. Riz, do you have anything you'd like to add before we close it out tonight?
Yeah, absolutely. Thank you. Again, Chris said it perfectly. I couldn't have said it any better myself. So, for fear of repeating what he said, I will just say, again, thank you so much to everyone, elite members, especially your continued, focus and resilience in this market and the ability to stay with us and can stay true to this and continue persevering. I applaud each and every one of you. Again, for those of you that also put your time in, watching the replays, whether you're there in Elite or whether you're just a subscriber, thank you once again. Would love to have you in Elite. If you're not, when we reopen, it's a extraordinary time. The world is, in some ways never been better. In some ways, we have things to improve on. But you know what? Just be thankful. It's easy to be ungrateful. It's easy to be down, depressed, angry, disappointed. Those are all easy emotions. Those are all things that we don't have to work hard to feel that way. But actually feeling happy, actually feeling grateful, actually counting our blessings, that takes work. I wish it was the
Yeah.
other way. I wish it was the other way where like by default, our default state is being happy and content. It's not, especially in this day and age. It sucks, but that's the truth. So we have to try. We actually have to physically and mentally try to be happy. And I have to take that advice myself. I have to, it's a reminder for myself as much as it is for everyone else. So I will say, we have to really make a conscious effort to be thankful, grateful, uh, as much as we can. I'm not going to sit here and be like, sit there for an hour saying hallelujah and being grateful and thankful for hours at a time. But I'm just going to say, just remind yourself, take stock of what you do have. There's people in the world that have a fraction
Oh,
of what we have that are sitting here looking at markets, talking about markets. They're a fraction, of what we have, and if they can continue to persevere, so can we. So with that said, Thanksgiving or otherwise, I do thank every one of you. I'm grateful and thankful for all the blessings that we all have, and I hope that we can round out the year in a good way, not just in the markets from a profitability standpoint, but from everything that's going on in the world, and hopefully we can usher in the new year in good spirits.
Couldn't have said it better myself. And as always, we'll see you in the market on Monday.